fund, then it is called soft capital rationing. So there are two types of capital rationing: hard capital rationing and soft capital rationing, right? Okay, fine. So that is what capital rationing is. Next one, we should be learning. Okay, let me ask you, can you name some other word for hard capital rationing? For exam, they can ask different names. Could you please tell me if there is any other name for hard capital rationing? Anyone? Hard capital rationing do have one more name, which is called external capital rationing. Okay, internal and external, really good. External capital rationing, and soft capital rationing is also known as internal capital rationing. Okay, really fine. Anyway, there can be two types of project in capital rationing, which is okay. So okay, fine. So can you see the Excel sheet? Can you see the Excel sheet? Please tell me whether you can see the Excel sheet or not in the screen. I'll be writing everything here. I'll be writing everything here. Every important topics, which are the chapters, which are the topic you need to study. Don't skip any topics that I will be mentioning on the very next moment. Okay. So someone please unmute and say whether you can see the screen or not. And how many marks can you expect from investment appraisal? Kindly comment on your text box. Kindly comment on your text box. How many marks can you expect from investment appraisal? Kindly comment. 20 plus, yeah, really good. You can expect at least 20, a maximum of 26 marks. 20 to 26 marks you can expect from investment appraisal. You can expect around 20 to 26 marks. Minimum of 20, maximum of 26. Which means in session C, there will be two questions, and and one question should be from investment appraisal for sure. The second question should be from either from either from business finance or from working capital. So there will be two questions in session C. One should be from investment appraisal, and the second one should be either from working capital or from business finance. Anyway, we do have 5 chapters, and from these 5 chapters, there is at least 20 mark questions, which will be in session C, and there can be 3 MCQ. There can be up to 3 MCQ in session A. Okay, it's not mandatory actually, but there can be up to 3 MCQ in session A. So you can expect 20 to 26 marks from investment appraisal. So there are 5 chapters, and the first chapter was basic investment appraisal techniques. Okay, basic investment appraisal techniques. Okay, basic techniques. And in this chapter named basic techniques, you have certain topics to study. First of all, I will be discussing all important topics. You should note down the important topics that comes under each chapters. Okay. So from basic techniques, the most important, you do study 2 basic investment appraisal techniques. Which are the basic investment appraisal techniques? Kindly mention on your comment box. Which are the 2 basic investment appraisal technique, which does not consider time value of money? Kindly mention on your comment box. Okay. It's ROCE. Very good video, Vidushi. Okay. It's ROCE and payback period. Okay. ROCE and payback period. ROCE do have one more name. Can anyone tell the other name for ROCE? ROCE can be asked in a different name. Can you name the other name for ROCE? Return on capital employed. It's ARR, not ROI. It's ARR. Accounting rate of return. ROCE can also be known as ARR and payback period. Payback period is the only method in which the entire life of the project is not considered. Okay, there is only one method in which the entire life of the project is not considered. That is what payback period is. And there is also discounted payback period, which will be discussed in later chapters. But as per the basic techniques, or else we can say regarded NPV, IRR, ROC, BPP, payback period. Payback period is the only method which does not consider the entire life of the project. Okay, and you have to study the difference between accounting profit, and cash flow. So which one should be? There is cash flow and profit. I'm asking you which one, considering profit and cash flow, which one is more relevant for, not relevant, which is more good for decision making? Is profit or cash flow? Which one is more good for decision making? Only cash flow. Cash flow is what relevant for decision making. There are certain reasons that, for example, profit can be manipulated. So cash flow is a much more important aspect in terms of decision making. So you need to study that, and you also need to learn you also need to learn relevant cash flows. Okay, for a cash flow to be relevant, there should be certain criteria. So what do you know? What are the criteria for a cash flow to be relevant? There are three things. There are three things. For a cash flow to be relevant in terms of decision making, there are three criteria. Which are they? For cash flow to be relevant in decision making, there are three criteria. Can anyone tell? Let me see who can tell this. You're going to write the exam in the next month, only 20 days left. So you should be able to tell this. For a cash flow to be relevant, there are certain criteria. So which are the criteria? Cash flow should be, come on, yaar, kindly tell me what are the criteria. Okay, it should be incremental. Really good, Yusuf. It should be incremental. Incremental means additional. Okay, additional, which means it should come additionally. Okay, not like what already in good one. It should be future. Okay, really good, Ahmed. Really good. It should be future. It's a future incremental cash flow. It should be future, not any past, not any committed sunk cost. Everything is relevant. If a cash flow should be relevant, it has to be future. It has to come in future. It has to be incremental. Additionally, it should come additionally in terms of doing a project. Okay, and then future incremental, and either it can be opportunity cost. Cash flow can be opportunity cost also. If three criteria, any of these criteria is going to be satisfied, then it can be relevant. Otherwise, it should not be relevant. Okay, so what are the relevant cash flows? You also need to learn the advantage and disadvantages of both ROC method, payback period method, everything. Okay, let me ask you, either there are two methods we have learned, ROC and payback period. Which among these method uses cash flow? Is there ROC or payback period? Which among ROC and payback period uses cash flow? One is using, yeah, payback period. Excellent, Almas. Excellent, Nandini. Payback period is using cash flow, but ROC is using something else. What? ROC is using something else. ROC is average profit. Excellent. Excellent. It's accounting profit. Very good, Vidushi. ROC using accounting profit and payback period is using cash flow. So as I said, cash flow is more good for decision making. It's an advantage of payback period considering ROC. ROC using profit and payback period using cash flow. But cash flow is actually good for decision making. Since then, what payback period is a better method, not better method in terms of using the cash flow. Payback period is good. Okay, ROC do have a demerit because it uses what profit can be manipulated. If you change the, it's an accounting profit. If you change the depreciation method, the profit can be manipulated by a manager itself. So profit is not good for decision making compared to cash flow. So these are the basic techniques. On the second chapter, you need to learn about the DCF method, discounted cash flow method. So what do you mean by discounted cash flow methods? I don't want the methods. I need you to understand what do you mean by the term discounted cash flow method. We are doing something. That's why it's called discounted cash flow method. It includes present value of cash flow. Yeah, okay. Rather, we can say we use time value of money. Okay, right, Vidushi. It's using time value of money. Since discounted cash flow method uses time value of money, that's why it's called discounted cash flow method. We are discounting the cash flow. We are considering the present value of future cash flow. So that is what discounted cash flow methods are. Okay, DCF method. So which are the DCF methods? Which are the DCF methods? NPV and IRR. Really good. NPV and IRR. NPV and IRR. So you have to learn NPV and IRR. And the full form of NPV is net present value and IRR is internal rate of return. You need to learn that. I'm not going to teach you what is NPV. I'm not going to teach you what is IRR. But I can tell you these are the important things. And you have an important theory here. That is what NPV versus IRR. Let me ask you, which one is good, NPV or IRR method? Definitely it's NPV, right? NPV is a better method. There are several reasons. Could you please tell me any reasons for NPV being a better method than IRR? What are the reasons for NPV being? It's an absolute measure. Excellent. It's an absolute measure. It's a perfect value, right? It's a value. And IRR is only a relative measure. Maybe it's a percentage. Okay, while IRR is a relative measure. Yeah, fine. Then anything else? Why NPV is better than IRR? It's the most tested questions till now. Till now, if you ask me which is the most tested theory question from investment appraisal, I can tell you it's the difference between why NPV is a superior method than IRR. Okay, wealth. NPV shows the increment in shareholders' wealth. Directly tells the increase in, yeah, excellent. NPV directly tells the increase in shareholders' wealth. Suppose NPV is positive 10,000, which means if we do this project, the shareholders' wealth will be increased by $10,000. Okay, then next one. I will ask you a question. IRR do have a demerit. IRR do have a demerit, which is for a same project, there can be multiple IRR. There can be more than one IRR, which will confuse us actually. Okay, let me ask you, when will be there multiple IRRs? when there will be multiple IRRs in a project. Okay, could you please tell me which is the situation where there can be multiple IRR for a single project? Cash flows are in negative. No, not cash flows are in negative. No, NP is 0. No, not NP is being 0. No, it considered if it is an estimate and may lead to wrong decision made. No, no, no. Two different cost of capital. No, there can be multiple IRR for a single project. It's a demerit of IRR, which is the situation. It's one of the most tested MCQ question, I would say. For a single project, there can be multiple IRR, and which is the situation. For a single project, if there can be multiple IRR, then there should be non-conventional cash flow, unconventional cash flow. If the cash flows are unconventional, there can be multiple IRR. Okay, conventional cash flow means a negative a negative cash flow in the year 0 and positive cash flow in the upcoming years. If any cash flow which is negative, which comes after the initial investment, then it can be non-conventional. Okay, a non-conventional cash flow can lead to multiple IRR. Let me ask you, what is the name for project in which one project will be eliminated? Sorry, certain project will be eliminated if we select one project. What is the name for the projects in which if we select one project, other all projects should be eliminated? That is the name of such project. It's mutually exclusive project. Then let me ask you, what is the name of the projects that if we select one project, all other project is being selected? So all other project is selected if we select one project. What is the name for such projects? No, it's not profitability index actually. No, 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 no. It's not divisible, not conventional. Such projects are called mutually inclusive project, right? If mutually exclusive means all other projects are being excluded. Mutually inclusive project means if you select one, everything should be automatically selected, right? For mutually exclusive project, NPV and IRR methods, which one should be good? NP is good. NP is good for mutually exclusive project. So considering all these aspects, NPV is a superior method than IRR. Okay, considering all these aspects, sir, IRR too much assumption based, I guess. Both do have assumption. NPV and IRR do have some assumption, but IRR's assumption, basic assumptions are not justifiable. Okay, we cannot justify the assumptions made by IRR, but NPV's assumptions can be justified. Okay, you can write that also. NPV's assumption can be justified but IRR's assumption cannot be justified. Okay, that is what NPV and IRR is. So let me ask you about consistent cash flow. So what is the name for the cash flow in which the same cash flow arises for a certain period? If the same cash flow is arising for a certain period, what is that cash flow called? It's called annuity. Really good, Yusuf. Really good. It's called annuity. Okay. So let me ask you, if it's for an infinite period, what should be the cash flows called? It's called perpetuity. Excellent. It's called perpetuity. If it's for an infinite period, it is called perpetuity. Okay. And if it's for a certain limited period, it's called annuity. You need to learn how to calculate annuity by using annuity factor table, which should be given in your formula sheet. Okay. You should be able to understand what are the things that is given in the formula sheet, and you should be able to understand what is the difference between annuity and perpetuity, how the calculation will differ. Okay. So that are the things that is being discussed in discounted cash flow method. Okay. Let me ask you. So since we learned about discounted cash flow method, on the next chapter, we should be learning about further aspects of discounted cash flow method. Okay, further aspects of discounted cash flow method. Here, we are from this chapter onwards, we'll be learning how to do a much more bigger questions. Okay, session C type question can be tested from this chapter onwards. Here, we are learning NPV calculation method. Okay, there are two types of NPV calculation method mainly. What are the two types of NPV calculation? Real cash flow. Yeah, not real cash flow. There can be real NPV and nominal NPV. Okay, it's using real cash flow, or it's called real NPV and nominal NPV. NPV can be calculated in two different ways, real method and nominal method. So anyway, for NPV calculation, from this chapter onwards, you need to learn that there should be adjustments regarding three subjects. Okay, NPV calculation. On NPV calculation, there will be three adjustments. Number one should be of inflation. Okay, you have to do the adjustments of inflation method, and you have to do the adjustments of taxation, and you have to do the adjustment of working capital. If you can do all these, you will be able to solve bigger question. Okay, bigger question, 20-mark question. Every exam, it can be tested that a 20-mark, it's highly probable, a 20-mark investment appraisal question is highly probable. So anyway, in NPV calculation, you have to do what? Inflation, taxation, and working capital, right? Okay. So that's it. You have to do questions. I'll be explaining you certain, I can give you certain important question that you need to do. It's a calculation question that you need to do before your exam. Anyway, that is what we learned in further aspects of discounted cash flow method. Then on the next chapter, which is called asset replacement decision and capital rationing. Asset replacement decision and capital rationing. Okay, guys, let me ask you. There are three topics in this. There are three important topics in this area. First of all, let me tell you lease versus buy. Lease versus buy. Whether we should lease an asset or whether we should buy an asset. It's an important question. Okay. EAC is an important question. EAC, equivalent annual cost. EAC is an important question. Yeah, fine. And one more question is there. Capital rationing. Okay. EAC means whether we should replace how often we should replace an asset. That is what being discussed in EAC. Let me ask you, what are the two types of capital rationing you are learning in financial management? Okay, Yusuf, I think you have already typed the answer. Okay, you have already done the answer. Anyway, really good, Yusuf. Okay, it's called hard capital rationing and soft capital rationing. Capital rationing is what the fund being limited. The fund that is allowed is being limited either by financial institution, which is called hard capital rationing, or by ourselves. We are ourselves limiting the fund, then it is called soft capital rationing. So there are two types of capital rationing: hard capital rationing and soft capital rationing, right? Okay, fine. So that is what capital rationing is. Next one, we should be learning. Okay, let me ask you, can you name some other word for hard capital rationing? In exam, for exam, they can ask different names. Could you please tell me if there is any other name for hard capital rationing? Anyone? Hard capital rationing do have one more name, which is called external capital rationing. Okay, internal and external, really good. External capital rationing, and soft capital rationing is also known as internal capital rationing. Okay, really fine. Anyway, there can be two types of project in capital rationing, which is divisible project and indivisible project. Divisible project, which means you can do that project as part. Okay, you can divide that project, and there can be indivisible project also, which means you cannot divide and do. That is what indivisible project. Both situation you have to identify which are the project we can do. Okay, that is what being discussed in capital rationing. Yeah, divisible. Okay, divisible project we are using profitability index, and if it is indivisible project, we will use trial and error method. Okay, so let me ask you one question. Since you have told me that we use profitability index and trial and error method, so if it is divisible project and what mutually exclusive, there are two mutually exclusive projects, then how you should respond to that question? There are two mutually exclusive projects and all the projects are divisible. Then how we should be ranking, right? We should be ranking. We should ignore the project which do have least profitability index. Okay, if two projects are mutually exclusive, it's better to ignore the project which has least profitability index, right? Okay, that is what we do if there is a mutually exclusive project. Okay, then on the final chapter, we are considering about risk in terms of risk and uncertainty in terms of NPV calculation. Here, you have to learn the difference between risk and uncertainty. Here, you have to learn the difference between risk and uncertainty. It can be tested. Let me write here 3. 3 means it can be tested for 3 marks only. The difference between risk and uncertainty can be tested for 3 marks only. Okay. Yeah, Yusuf is doing a really good job. And there is sensitivity. There is sensitivity. Okay. There is sensitivity analysis and also probability analysis, right? And also probability analysis. You have to learn what is sensitivity analysis and what is probability analysis. So let me ask you, in terms of sensitivity analysis, if they ask you to ask us to calculate the sensitivity of volume, then whose sensitivity we can calculate? My question is, if they ask us to calculate the sensitivity of volume, then whose sensitivity should be calculated? You cannot calculate the sensitivity of volume directly. No, it's not variable cost and sales. There is a single word for that. Contribution. Yeah, really good, Yusuf. Yusuf is doing a good job. Okay, we have to calculate the sensitivity of contribution if they ask us to calculate the sensitivity of what? Volume, right? Okay, that is what sensitivity means. Sales volume. If they ask us to calculate sales volume sensitivity, then we can calculate the sensitivity of contribution. Then suppose if they ask us to calculate the sensitivity of discount rate, we have to consider one more thing. Okay, IRR, really good. If they ask us to calculate the sensitivity of discount rate, we have to consider IRR also. Okay, we have to consider IRR, and based on the IRR, we need to make the calculation. Okay. Anyway, probability analysis. So there can be expected values. You must be, I think you should be you should be knowing what do you mean by expected values. So expected value can be calculated by a certain method, and based on that, you need to calculate NPV. Normally, if they ask us to comment on an NPV calculation, there can be 1 mark only. no, in normal condition, if they ask us to calculate, if they ask us to comment on an NPV, there can be only 1 mark. But based on expected values, we are doing expected NPV. Then there can be 2 marks for calculation. Then there can be 2 marks for not calculation, for telling which for what for commenting on the NPV. There can be 2 marks. So you need to mention whether that project is acceptable, and you also need to mention the risk involved. Okay, risk involved in your in your decision. Okay, you have to mention 2 things. If it is for 2 marks, 1 mark, for 1 mark you should mention whether we can do that project. On the for the second mark, you have to tell the risk involved in the calculation, right? The risk involved in our decision. Okay, there can be certain risk also, that also need to be considered. That is what probability analysis is. And one more method which can be done using computers, and it is called simulation. So don't worry, guys. Simulation will never be tested like what calculation. It can be tested only as theory. You need to learn what do you mean by simulation for at least 6 marks. For at least 6 marks. Okay, simulation is an important method. So it can be done using computers only. So they will never ask a theory. So they will never ask a calculation question. They will ask a theory question. But you need to learn at least. You please kindly learn writing about simulation for 6 marks. Okay, consider a question like what do you mean by simulation? Write down the steps involved in simulation. So you can expect such a question, and you need to learn to write about simulation for at least 6 marks. Okay, for a 6 mark, they can be tested for 6 marks. Okay, simulation method is there, and there can be some other theory like adjusted payback period, discounted payback period, which is not a theory, it's a calculation. Discounted payback period. Then you have to also do risk adjusted discount rate. Risk adjusted discount rate. Everything you have to learn. By the way, I'm mentioning sensitivity analysis, probability analysis, and simulation. Okay, some other theories also there. You have to do that. Anyway, you have to learn about standard deviation also. What do you mean by the term standard deviation? And if standard deviation increases, what will happen to the risk? Everything you have to learn. So I'll be writing here some probable questions, some probable question, some important question that can be tested in investment appraisal. Okay. First of all, I'm writing a question called nominal NPV versus real NPV. These are calculation questions, right? Nominal NPV versus real NPV. Okay. Nominal NPV versus real NPV. So the question should be, you can practice Pink's company. Okay. You can practice Pink's company, which is an important question. Nominal versus real NPV. Then another important question should be like expected NPV. A question to calculate expected NPV. If you do have any doubt, you can just unmute and ask. Okay. A question based on expected NPV is Guinea company. Guinea company. Okay. A question based on lease versus buy. A question based on lease versus buy should be Melanie company. Melanie company. Okay. A question based on asset replacement decision, which is EAC, should be Clover company. Clover company. A question based on capital rationing. Capital rationing. Okay, there can be 2 questions. I can give you 2 questions. One should be Clover, then Crockett company. One should be Crockett company, and I can also tell you Sulu company. Sulu company, which is a latest question from ACCA. Okay, and for the 6th one, I can tell you there can be sensitivity analysis. There can be sensitivity analysis. Okay, sensitivity analysis. For sensitivity analysis, there can be a question like Puloro company. Puloro company. Okay, and there can be what? Sensitivity analysis and probability analysis. Yeah, probability analysis is nothing but expected NPV. Okay, then you can also consider a question NPV, IRR, and payback period. Everything is tested in a question called Melplash company. Melplash company. Okay, and you can do certain question like Elan company, which is a new question. Elan company, and also Gale company. Both of them are new companies. Sorry, new questions. Okay, so latest ones. These are the latest ones. Both are, I think, regarding the NPV calculation. These are the latest question you need to learn. Okay, so if you can practice all these questions, I can assure you that a similar question should be tested. A similar question can be tested for your main exam as well. Okay, I can assure you that a similar question can be tested for your main exam as well. Okay, anyway, by the way, these are the important calculation question, I would say. Not theory, these are important calculation questions. These are important calculation questions. Okay. Okay, you need to learn all these calculation questions before going for your exam. I can assure you, there should be at least 20-mark question. Okay, I can assure you there should be at least 20-mark question. So any of such a similar question should be there. Okay, I mentioned here certain question. Any of these type question can be tested. Okay, I can assure one question should be, if you can do all these question, you will definitely get 20 marks. Okay, and there should be some theories also. Okay, I'll be writing here the important theory questions. Okay, I will be writing here the important theory question. Do you want me to write the questions only, or else we need to discuss the answers also? Kindly mention whether you want the questions only, or else we need to mention discuss the answers also. Okay, definitely I will be discussing the answers. Okay, so the theory questions, important theory questions are, first of all, let me tell you, we have already discussed it. NPV versus IRR. NPV versus IRR. Okay, which method is a better method? They will ask why NPV is superior than IRR. So we need to discuss the advantages of NPV and the disadvantages of IRR method. Okay, advantage of this question will surface. Okay, both. Okay, we need to discuss the advantage of NPV method and the what disadvantage of IRR method. Why NPV method is superior? Then we have to discuss the advantage of NPV method and the disadvantages of IRR method. Okay, then they can be asked why DCF methods are superior than non-DCF method. Okay, what is the main difference between discounted cash flow method and non-discounted? So first of all, let me ask you, which are the discounted cash flow methods? We have already discussed that. Which are the discounted cash flow methods? Yeah, Yusuf, you are doing really good. Okay, let me ask you, which are the discounted cash flow methods? Which are the discounted cash flow methods? NPV, IRR, discounted payback period. Yeah, really good. Okay, which are the non-discounted cash flow methods? ROC, ROC, then only ROC. ROC and ARR are same one. Payback period. Okay, payback period is the and our ROCs are the non-discounted cash flow methods. So let me ask you, as Yusuf said, discounted cash flow methods consider time value of money, right? Discounted cash flow methods consider time value of money. One advantage. And the second one, among non-discounted cash flow method, there is a method called ROCE, which uses profit rather than cash flow. It's a disadvantage of non-discounted cash flow method. One among the non-discounted cash flow method called ROCE uses profit rather than cash flow. Okay, you can write it as the second point. Okay, and then third point, you can write the non-discounted cash flow method called payback period. Uh, only consider that does not consider the entire life of the project. Payback period does not consider the entire life of the project. Other all method considers the entire life of the project, right? Okay, so that's it. Discounted cash flow methods and non-discounted cash flow method. And one more thing you can write, NPV is the most superior method for decision making. Among all the method, one method which is a discounted cash flow method called NPV is the most superior method, which gives exactly how much wealth that will increase shareholders, how much shareholders wealth can be increased by doing this project. Okay, NPV is something which tells us how much the wealth of shareholders will be increased after doing this project. So among all these methods, NPV is the most superior method. You can tell all that. Assumptions are justified. Yeah. Okay. You can tell that also. Okay, no problem. Okay. Anyway, next important question should be other advantage of leasing rather than cost benefit. Other advantages of leasing rather than rather than cost benefit. Okay. What are the other advantage of leasing? If you have an option either to buy an asset or else you can lease an asset. So let me ask you, what are the other advantages of leasing an asset rather than the cost benefit? Tax benefit of leasing? No, I'm telling about it's a cost, right? Tax benefit is regarding the cost. I'm not asking about the cost or something. I'm asking about the other benefit of leasing rather than the cost. You do have two options. Either you can rent a car or else you can buy your own car. So if you rent a car, which means if you lease a car, then you do have certain benefits. Which are the benefits? We have short period project and we can lease. Yeah, short period project we can maintenance cost will be borne by lesser. Yeah, I'm looking for much more better answer. Your answers are not that much bad, but actually I'm looking for a much more better answer. Okay, if you are renting a car, if you are leasing a car, then we won't be having the burden of depreciation. Okay, you don't won't be having the burden of depreciation. Okay, just see yourself. If you rent a car, our gear changing will be rough only. Rough gear changing only will be there. Okay, if it's our own car, if we buy our own car, we will smoothly change the gear only. Okay, that is the difference between. No, that is not what the difference. Actually, the difference is we don't have the burden of depreciation. Okay, if you are leasing the asset, we don't have. Okay, it's really good. Take advantage of new technology. Yeah, really good. Actually, her name is Tingani Botha, right? She's from Malawi, an African country. She told me that take advantage of new technology. It's really good answer. We can upgrade to new technology if you are leasing. Okay, you can change the car immediately. You can give back that car and you can lease back the new technology car, right? So changing technology, dismantling cost should be eliminated. Yeah, Tingani, okay, fine. Uh, Flexibility in replacement. That is what you can upgrade to new technology. Then you don't want upfront capital. Okay, so much upfront capital is not necessary. You can invest in something else. If you are leasing a car, you don't need high upfront capital. You can invest in something else. Okay, so these are the reasons. So these are the other advantages of leasing. Okay. Then one question, why EAC is being used for asset replacement decision? Why EAC can be used for asset replacement decision? Why EAC should be used for asset replacement decision? Can anyone now unmute and tell me? Can anyone now unmute and tell why EAC can be used for, should be used for asset replacement decision? I am giving a challenge actually. Anyone can take up the challenge and tell me whether why we should be doing EAC.
So
Yusuf?
to know the best time to replace the asset,
Hmm. Okay.
ESC is ESC can be used.
Yeah, EAC can be used. So why it should be used? Yeah, you're telling where should be used. I'm asking why. So this is the problems regard students usually face. They don't get the question actually. So actually, whatever you told was right, but you were telling where should EAC be used? EAC should be used if you are considering asset replacement decision. EAC can be used. That is what where should be used. Then I'm asking about why should we use EAC in asset replacement decision? Yeah, the answer is actually we are comparing the cost, NPV of cost of different useful life, right? 3-year cycle, 4-year cycle. Every cycle we are considering the cost and we are calculating the NPV of cost, and we cannot compare the cost of different useful life like 3-year, 4-year cost, 5-year cost. We cannot compare. So in order to make them comparable, we have to turn every cost into an entity which is called EAC. Okay, in order to compare all costs of NPV cost of NPV of cost, then in order to make them comparable, we need to make them into an entity which is called EAC, equivalent annual cost. Okay, that is why we are using EAC. And if such a question comes in, then you have to write the steps involved. Steps involved. We need to find all the cost, and we need to find the NPV of all the cost, and you have to divide by the relevant annuity factor. Then you will get EAC, and you can compare the EAC. So let me ask you, which EAC should be selected, the highest one or lowest one?
Lowest cost ESC
Lowest
should be
cost.
selected.
EAC should be, since it is a cost, EAC, equivalent annual cost. We are the one who should be able to find which one should be the least cost. Okay, so we need to reduce cost so that we will select the least only. Okay, least EAC should only be selected. Okay, that step also you should be writing. Okay, then next question, you have to differentiate between hard capital rationing and soft capital rationing. Okay, hard versus soft capital rationing. Hard versus soft capital rationing. So what do you mean by hard and soft capital rationing? I already mentioned once. Or
Hard
else in the
capital
hmm,
rationing is done by external agency like
yeah.
bank, government, and like that. Soft capital is done by company to improve the management skills or to take best among all projects.
Yeah. Okay. Then what do you mean by soft capital rationing?
Soft capital is done by management to increase the management skills or to select best project among all.
Yeah.
So
I can
sometimes
simplify that. If the fund is limited by external authorities like bank, finance, any financial institution, then it is known as hard capital rationing. If our own management is limiting the fund, which means we are ourselves reducing the investment, then it is called soft capital rationing. So that since other institutions, financial institutions are limiting the fund, it is also known as external capital rationing. Okay. If we are ourselves limiting the fund, then it is known as internal capital rationing. Okay. Right. Which means soft capital rationing. That is what the difference between hard and soft capital rationing is. Okay. So it's one of the most important question. Then let me ask you, some other question like simulation method. You have to write down the importance of simulation method. Okay. You have to write down a theory based on simulation method. Anyone explain me what do you mean by simulation?
Is a computer-based technique where we can see multiple variables changing at a time,
Yeah.
as compared to sensitivity, where single critical variable is
Okay.
compared.
Really good. Fine. Then yeah, whatever Yusuf said was exactly correct. So there is one method called simulation in which we consider the effect of one variable changing. Okay, like sales. If sales changes, what will happen to the NPV? If variable cost changes, what will happen to the NPV? Only one variable at a time. The change in one variable at a time is being considered. But in real life, we cannot say that only one variable will change. All variable will change at the same time, right? Can change at the same time. Maybe sales can change, variable cost can change, fixed cost can change, anything, any variable, like a discount rate can change, anything can change. If any of such variables change, so more than one variable changes, then what will happen to the NPV? That is what should be considered in simulation. Okay, unlike sensitivity analysis, simulation considers multiple variable changing at once. Okay, so you have to learn in your syllabus. You should also learn the steps involved in simulation. There is a simulation called Monte Carlo simulation. Okay, you have to learn the steps in Monte Carlo simulation. That name for simulation is called Monte Carlo simulation, which is being mentioned in your study hub. Okay, study hub, they says this is what Monte Carlo simulation is. So for Monte Carlo simulation, you can do Monte Carlo simulation using Excel also actually, but it should not be tested in your exam. But in real life, Monte Carlo simulation can be done in your Excel sheet. Okay, for example, I will tell you there will be we should mention all the variable like sales. You have to minus variable cost, you have to deduct what fixed cost, every variable we have to mention, and how all these variables are used for NPV calculation. Okay, we have to mention all things. Then if we enter some maybe some random numbers in your what keyboard, then they will generate certain value for sales, variable cost, fixed cost, everything. Computer will generate certain random values for all sales, variable cost, and fixed cost, and computer itself will calculate an NPV. Okay. If we again press the same key, computer will generate some different values for sales, variable cost, and fixed cost, and will generate some other NPV. So if we press again, then another NPV should be calculated. So after every cycle, there should be different NPVs, and we will get all the probable NPV. Okay, we will get all the probable NPV. That is what the possibility. Okay, every possible NPV we will get if we press enter or some any key in your keyboard. It's like being the program. The program in that program, if you press any key, so if any key is pressed, they will give random values to sales, variable cost, fixed cost, and they will generate an NPV. And if we again press that key, then another NPV is being calculated. If we again press, another NPV is being calculated, and probably you will get all possible NPVs. That is what Monte Carlo simulation is. Okay, that is what Monte Carlo simulation is. That should be, you should learn that so that you can write down the theory regarding simulation method. Simulation cannot be done without computers. Only using computers you can do simulation, right? So it's a complex method, and at times it can be costly also. Okay, at times it can be costly also. So Monte Carlo simulation is can be costly, and it can be what? And it can be Monte Carlo simulation is costly, and it can be what?
Changes variable multi.
It can be costly, and it's a complex one. Complex one, not so that is it's not like sensitivity analysis. It's a complex one, and it can be costly also, right? So that is what simulation method is. Anyway, we learned about simulation method, and you also need to learn what is the difference between risk versus uncertainty. Risk versus uncertainty. What do you mean by the difference between risk versus uncertainty?
Risk can be measured, uncertainty cannot be measured. It
Risk,
involves probabilities in risk.
yeah, it involves probabilities, and uncertainty.
Does not include probabilities, cannot be measured.
Okay. Risk can be measured because it involves probability. Uncertainty cannot be measured because it does not involves probability. So risk will increase if the variability of return increases, and uncertainty will increase if the project life is being increased. Okay, if it's a long project, then its uncertainty will be increased. If it's a short project, then its what uncertainty will be reduced. Okay, if the variability of return increases, risk will also increase. Okay, fine. Then let me ask you one more question. What are the methods in considering the risk involved in NPV calculation? In NPV calculation, there are some risk involved. In order to find the risk involved, what are the methods we can consider? What are the methods we can consider? for assessing the risk involved in NPV calculation? Could you please tell me? You can use what probability analysis. You can use risk adjusted discount rate. You can use adjusted payback period. You can use what discounted payback period. All the four methods you can write down: probability analysis, risk adjusted discount rate, adjusted payback period, and discounted payback period. All the four methods you can what mention in what in the methods which access the risk involved in NPV calculation. Okay. Then next question, I would say, uh, how you can overcome. It's also an important question. How you can overcome what capital rationing. What are the reasons involved in capital rationing? Okay, you have to learn what are the reasons involved in capital rationing. Reasons for hard capital rationing and soft capital rationing. Hard and soft capital rationing. What are the reasons? Okay, what are the reasons for hard capital rationing and soft capital rationing? And if you ask me to tell one more question that can be asked from investment appraisal, it can be, I would say, they can test a question like, mm, okay, the difference, you have to mention the difference between sensitivity analysis and probability analysis. Okay, such a question can also be tested. Sensitivity analysis and probability analysis should be compared. Okay, so these are the important questions, important theory questions from investment appraisal. I can assure you that at least your 80 to 90%, if you can learn all the theory questions I have already mentioned, these are the theory questions I have already mentioned, and these are the calculation questions that can be tested. Okay, these are the calculation questions and these are the theory questions, right? I have given here 9 calculation questions. No, 10 calculation questions actually. Okay.
Sir, do we get any question related to equivalent annual benefit?
Equivalent annual benefit can only be tested in section A and B. It cannot be tested in section C. No, not cannot be. It is least likely to be tested in section C actually. Okay. So these are the important calculation questions and these are the important theory questions, right? So do you have any questions regarding the same? Any doubts or something? Any doubts or something? I'm again asking you. If you are having any doubt, you can ask now.
Sir, in that eighth question, clearly, NPV, the four things were risk adjusted cost of capital,
Yeah.
risk adjusted payback, and more
Um,
to
I can't hear you properly.
risk adjusted cost of capital
Uh,
and
risk adjusted cost of capital.
risk adjusted payback period. And what
Uh,
was two
sorry.
in that eight questions of theory, NPV risk? How can we
Yeah.
measure risk in NPV?
Yeah. How can we access the risk involved in NPV calculation? You can write down four important things. Four important things. One should be what? One should be, okay. I can write down here the four important things. One should be probability analysis. You should write about probability analysis for 2 marks. This can be an 8-mark question. So probability analysis, you have to write down about 2 marks. Okay. Risk adjusted discount rate. Risk adjusted discount rate. Okay. You have to write about 2 marks and adjusted payback period. Adjusted payback period. You have to write about 2 marks and discounted payback period. You have to write about discounted payback period for 2 marks. So in total, there can be an 8-mark question. Okay. This is how the 8 mark you can get. So anything else? Anyone do have any questions regarding the same? Not regarding anything we have mentioned above. Okay. Did you find the session useful?
Yes, sir. 100%.
Okay. Actually, if you learn everything I have mentioned here, you will most probably you will get the 20 marks. Okay. So these are the probable question that can be tested from investment appraisal. Okay. So we on the upcoming days, we will discuss about others, what other topics like working capital, business finance, and business valuation, risk management. Everything will come one by one. Okay. So don't worry, we'll discuss everything. I hope you like our section. So we will be discussing more based on working capital in the upcoming days. Maybe after tomorrow, we'll be discussing working capital. And after discussing everything, we will be doing problems. Okay, we will be doing questions. Yes, Yusuf, come on.
Yes, sir. Was very helpful.
Yeah.
Mm.
Okay. Yusuf, where are you from?
Hyderabad, sir.
Yusuf is from Hyderabad. Okay. Vidushi, where are you from? Vidushi, where are you from? Vidushi. You're from
Punjab, it's in, sir.
Punjab. Okay, Punjab. Okay, fine. Nandini from Kerala, Trivandrum, right? Then Khalid from. Okay. Ahmad from Pakistan, right? Ahmad is from Pakistan, and I don't know. Okay, there are people from different part of the world. Anyway, I hope this session was useful, and I want you to work harder. I want you to pass, since even if you are not our students, um, our regular students, I want you to pass the exam, do well, prepare well, and learn everything properly, so that now it's 11th, only few 25 days are left for your exam. December 5th is your exam date. So do all questions. So prepare well. Thank you. Have a wonderful
One
days
small
ahead.
question. Uh,
Sorry.
one small question, sir. Sir, if
Okay.
I'm preparing for investment appraisal, other
Hmm.
topics are getting pending. So I'm quite scared, sir.
I didn't get the question you were asking. If investment appraisal,
I'm studying, so risk management and cost of capital is getting pending. So I'm
yeah.
quite scared.
You
How
have
to-
to see, you have to prepare a proper timetable, since we discussed about investment appraisal today. So after 2 days we'll discuss about working capital. So for tomorrow and after tomorrow, you have to learn working capital. Then after tomorrow in the evening, we'll be discussing about working capital, so you'll get the benefit. So on the upcoming days, every 2 3 days, you have to change the topic. Okay, otherwise you will feel uncomfortable. Okay, otherwise you will feel uncomfortable. So um okay, Ahmad is asking, sir, can you please repeat about probability? Okay, so in your exam, if they ask you a question like, what are the different aspects that should be considered in order to access the risk involved in NPA calculation, you can consider probability analysis. You can consider risk adjusted discount rate. You can consider adjusted payback period. You can consider discounted payback period.
So
All the four methods you can
let's start.
consider in order to access the risk
So as
involved
I
in
told
NPA
yesterday,
calculation.
yesterday we
Okay.
had already
So you have to
completed
write at
investment
least
appraisal. Today
probability
we will
for
be
probability
discussing about
analysis. You have
working
to write at
capital.
least for 2
Okay.
marks.
So
And for
let's
all
discuss
methods, you
about
have
working
to
capital.
write at least for
First of
2
all,
marks.
what do you
Then
mean
only
by
you
the
will get
term
the
working
8 marks
capital?
for such questions.
Anyone else?
Okay. So that's
Can
what
anyone
I
tell
was
me
telling.
what do you mean by the
Anyway,
term working
you have to
capital?
prepare, you have to maintain a proper timetable,
You
learn
can
everything
unmute and tell
in a
me.
proper way.
Anyone can unmute
I
and
think,
tell.
Ahmad, you got the answer, right?
What do you mean by the term working
Okay,
capital?
thank you, Ahmad. Okay,
The more
The
you
so
capital,
prepare a timetable.
capital,
So
the
you have only
capital used
25
for
days.
day-to-day
Split the
operations.
25 days
the
for
capital
investment
used for
appraisal,
the
for
day-to-day
working capital,
operation.
for
For
business
the
finance,
day-to-day functioning
business
of a company,
valuation,
we do have initial
risk
investment.
management,
Apart from
and other
that,
theory.
for the
Okay.
day-to-day
As per
operation, we need
reports
a
from
certain
ACCA,
amount of
as
money.
per the
That money is
latest
called
reports
working
that
capital.
came from
Okay,
ACCA,
that
the
money is called
students
working
fail
capital.
due
In
to their
working
lack of
capital, as
mark
per
in
our
section B
Kaplan
only.
textbook, how many
Okay,
chapters are
due to
there?
their lack of mark in section B, so you have to focus more on section B.
How many
While
chapters are there
doing
in working
section C and
capital as
section
per
A,
our
please
Kaplan
don't
textbook?
Four
forget to do
chapters.
Four
session B
chapters.
questions.
Yeah, there
Okay,
are
risk
four
management
chapters.
questions can be there, business valuation question
There
can
are
be
four
there,
chapters.
business finance question
And
can be there, working
how
capital
much
question can be
marks
there.
can you
From
expect
these
from
four
working capital?
computers, you can do simulation, right?
26.
So it's a
Yeah,
complex
20 to
method,
26.
and
It
at
will be
times it
around
can be
20
costly
to
also.
26. You can expect a minimum
Okay,
of 20 marks and a
mute and
maximum
tell
of
why
26 marks.
EAC
There
can
can be
be
a question
used
in
for,
working
should be
capital can
used
be
for
tested
asset
anywhere. Either
replacement
it
also.
can be asked in session A, session B, and session C.
I'm giving a
In
challenge
session
actually.
C, there will be
Anyone
two
can take up
questions.
the
One will
challenge
be
and tell me
surely from
whether
investment
why we
appraisal,
should be doing
and the
EAC.
second question will be from working either from working capital
So
or
So,
from business
so to
finance.
know the
Okay,
best time
there are
to
two
report the
probabilities.
asset
mm,
One question should be always from investment appraisal. The
emergency
second
is
question can be from working
easy can be
capital. It
used.
can also be from
yeah, EAC,
business
EAC
finance
can be
also.
used.
So,
So why it
as
should
I
be used?
said, there will be a question in session C.
Okay,
Apart
you're
from that,
telling
you can
where
expect
should be used.
question.
I'm asking
Most
why.
probably there can be
So
a
this,
question.
this is
Okay, not sure. There can be a question in section C. Apart from that, you can also expect MCQ questions. Maybe around maximum 3 MCQ question can be tested from working capital. So you can expect a maximum of 26 marks from working capital. So as you said, there are 4 chapters. Okay, there are 4 chapters. In your Kaplan textbook, you can find that all the chapters which comes under the topic working capital will start with the working capital only. Okay, the name of the chapters will be like working capital management, inventory, working capital management, receivables, working capital management, cash. So all the chapters which are under working capital will have the name working capital. So what was the first chapter from working capital? What was the first chapter from working capital?
Under
It's some
working capital.
yeah, it's something called the overall working capital. It's working capital itself. Okay, overall, what do you mean by the term working capital? What are the working capital ratios? What are the equations? What are the what different working capital cycle? How we should invest in working capital? How we should finance the amount in working capital? Everything will be discussed in the first chapter itself. Then on the second chapter, we will further discuss about some more topics called what was being tested in section. Sorry, in second chapter. What was second?
Inventory control.
Yeah, inventory management. Second chapter was about inventory. Second chapter was about inventory. Okay, inventory is also part of working capital. The amount we invest in inventory is also called working capital actually. So anyway, inventory. Then Next chapter was
Receivables and payables.
receivables and payables. It's receivables and payables, right? The second chapter was receivables and payables. Today I'm getting more and more responses. I'm really happy that you respond. Okay. Anyway, next one. Next chapter is about
Cash and funding strategies.
cash and funding strategy. Next chapter is about cash and funding strategy, or else I would say cash management. Okay. So there are 4 chapters in working capital. Number 1 was the overall working capital management. Number 2 was about inventory, where you will be learning about EOQ, just-in-time stock management, everything. And number 3 was receivables and payable management. And number 4 is cash management. So as my experience, since my experience is concerned, if you ask me which is the most difficult question in session C, I would say it will be the question of receivable management. Till now, if you ask me which is the most difficult area students mostly feel difficult with, are the questions from receivable management. Okay. In our normal sessions, since this is only a revision session, for our normal sessions, I used to do more questions regarding receivable management. Okay, we do more questions from receivable management so that our students they will feel easy to grab that idea. So anyway, receivable management question is one of the most important question, not most important one, I would say. It's one of the most toughest one. Okay. And then we do have the cash management. Anyway, we'll discuss about the topic that will be tested in the first chapter, can be tested from the first chapter. Okay. So I would say, as you told, working capital. The term working capital means it's not the initial investment. Apart from the initial investment, for the day-to-day operation of a company, we need a certain amount. That is what called working capital. That is what called working capital is, right? So then let me ask you, there is a term called cash operating cycle. Cash operating cycle. So could you please tell me what do you mean by the term